In this video, traders, we're going to talk about some of the traps that intermediate traders can fall into. Stay tuned. Hey guys, a very warm welcome to you. Thank you so much for joining me. Thank you for your shares, likes, subscriptions, comments, all that kind of stuff. If you like these videos, your support is much appreciated with likes. It's much appreciated when you're sharing with others, and of course your subscription as well is much appreciated. We're approaching quite a big milestone thanks to you, so appreciate that. Okay, so intermediate traders. I define an intermediate trader as someone 6 months, 1 year plus, that type of thing. So depends on how much screen time you've got, etc. Everyone's different, but really, beginning trader is kind of, you know, what's the market doing, what the kind of patterns are, and kind of digging rabbit holes and finding a strategy. Intermediate trader might not quite be profitable, might not quite be at that profitability stage yet, but you have a strategy, maybe a few. You're maybe a little bit working on your rules and your discipline more than anything else. And you're trying to push a little bit more size in places. You're just you feel like you want to make that progress. You feel like, okay, I've done quite a lot of stuff here, but I don't really have much to show for it yet, but I just really want to push the throttle down. So that's really one of the first things that can hinder an intermediate trader, and that is trying to scale up position size too soon. It's a common thing, guys. We've all been there, right? We get to a point where we have spells of good profitability and we go, right, well, if I can scale up my size, instead of making 5 grand, I can make it 50. And so you start to think, well, I'll get my size up, but you haven't quite ironed out the kinks of the drawdown yet. And very often we start to scale up size, we start to scale up after a good run. And generally the market is cyclical and our P&L is cyclical, because as an intermediate trader, you tend to do well in one condition, and then when the conditions change, you give it all back. And it's that 3 steps forward, 4 back, 4 forward, 5 back type thing. And so scaling up when you're at the peak of those 4 forward tends to mean that when you take the steps back, it undoes on a lot more. And that's why a lot of people quit the game. So be careful about scaling up too soon. Work on being able to, once you've kind of been in the market for a year, you start to, not always, because conditions don't often change that much, but cycles and markets and conditions start to change, and your job as an intermediate trader is to be able to weather different types of conditions. It doesn't necessarily mean trade them and make money in all the conditions. It means keep the money you've made in one condition. So if you're very good at a trending volatile environment and you've made money, your job as an intermediate trader is then to make sure you can keep that money in the next conditions change, if they go quiet or if they go calmer, if they go choppy, so that you're ready to put the throttle down again when things go right. Now, this is where I think the challenge of many traders, they start to push too hard when conditions have changed. The idea is when conditions change is you either step back or you adapt and you change your strategy. It's human nature, guys. If something's been working for one period of time, you want to keep doing that and do more of that. But if the conditions that you're operating in have changed, you are kind of just banging your head against a brick wall and undoing the work. So intermediate traders, because purely of the amount of time they've spent in the market, haven't seen the different market cycles and the negative impact that potentially has on your P&L. So you obviously, why would you think anything different other than, hey, I should just press harder? So just be careful of that. If you're in that stage where conditions are changing slightly in the market you're trading, perhaps there's more bearish sentiment, perhaps there's more choppy sentiment, etc., 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 then your job is to hold on to the capital you've made. Now that might mean stepping back while you come up with a strategy with very, very small size that works in that environment, or stepping back completely. Now, I know many people are like, I'm not going to step back completely, and I get it. You want the screen time, you want the experience, understandable. But just recognizing that when conditions change, that could be really, really damaging to your account. I think I did a complete video topic on that. So sizing and conditions are two of the big things for intermediate traders. The other thing is sweeping stuff under the rug and not going back to revisit it. So what do I mean by this? So, you know, we've made mistakes, and as to get to an intermediate trader, you've probably made a lot of mistakes. You've taken some pretty heavy losses, you've had some drawdowns, you've felt the pain, you've had blood, sweat, tears, almost literally, the frustration, the anger, the despair, and maybe that still comes in waves. And you know, you're like, God, I've been working so long, I still can't get traction with it. Why? You know, I'm doing a plan, I'm doing this, I'm doing that, and I'm still struggling. Why? And that comes in waves, and sometimes you have a great week and like, yeah, you know what, I've got it, and then give it back again. And this, but that's the turning point of a trader. And I think, one of the things that many people get into is they have swept some of the challenges and maybe some of the things under the rug that have got them where they are, i.e. maybe they've got a propensity to trade on tilt now and then. Maybe they've got a propensity to trade too much size. Maybe they kind of overtrade a bit, and they've done well because they've overcome that and started to get some traction, but it's almost like that thing will pop up again at some point when the pressure's back on. So maybe the right environment is there and things are working great. Those challenges don't come up, but maybe when the environment starts getting tricky and the trade number gets smaller and the opportunities get smaller, that's when these things come out from underneath the rug that you swept under there and come back to bite you. So it's dealing with these things. And actually, like over trading and trading on tilt and all this kind of stuff, if you deal with it head on, even when things are going well and you still have drills and discipline rules and structure and accountability to deal with you breaking rules or over trading, all this kind of stuff, it means that it's not going to come and bite you further down the line. You're better dealing with it now and taking a small hit than you are further down the line, forgetting about the fact that under this condition you trade on tilt and then losing £250,000. That just doesn't make any sense. Better off losing a couple of grand in the early days and dealing with it, understanding what it feels like and see and understanding how it appears so that you can mitigate it in the future. So sweeping things under the rug, if you feel like, hey, you know what, now and then that crops up and gets me, deal with that. Make a concerted effort to deal with that. And it's normally things like I said before, another thing might be, let's say a red week and then next week you kind of end up trading more size and more aggressively and stuff. So just watch out for that type of thing. I guess the final thing, guys, that for intermediate traders is really getting a bit despondent and not looking at the progress they're actually making. It's too easy to look at your P&L from the 0 point when you started trading and go, well, I'm still down. Yeah, but you may still be down, but that's not the way to judge your trading at the moment. That comes later. P&L is the benchmark later when you are profitable, when you have some consistency, when you have a strategy that's working and stuff. At the moment, you're finding your feet. At the moment, the job is losing as little as possible and stopping the damage and dealing with discipline and working on all the skills that you need to take you to profitability. And the crazy thing about trading, guys, and that's why the barrier to entry is so low to get in, but the kind of profitable trader club is such a small amount of us in there, because that is where the challenge lies. It's so many things have to line up just to start making a little bit, because it's almost like you can't, let's say you've got a skill. I'm trying to think of playing a musical instrument as an example that comes to my head. You could probably play something on a musical instrument that's relatively simple and it sounds all right, but to play something really, really impressive, then you're going to have to learn a lot more and be more advanced. So you've got something to show for your skills, but trading you don't. Trading, you have lots of skills, but unless you have the lot needed, you still are probably losing money, maybe less so, and maybe the way you're losing money is slightly different. You have a week profitable, week red, blah, blah, blah. So it changes slightly, but you still have to work on all those skills before it kind of tips you over the line, and then you start getting progress and progress and progress and progress. So it's very different to kind of normal endeavor out there. So one thing I think is just not getting too despondent with things, not saying, okay, well, it's not working, and aligning your identity as a trader with the P&L from when you started, rather than from your things you've learned and your discipline and your improvement in your trading plan and your structure and how you're trading and your setups and what you're looking at and all this kind of stuff, because all that then starts to fall into place and then builds something that then starts to translate to P&L. So that's something I'd say that a lot of traders, intermediate traders, a trap that a lot of intermediate traders fall into. Anyway, guys, a short video just to the camera, just kind of thinking about these things. Go and check out some of the other videos on the channel. Take care, guys. Keep your risk managed. I'll see you in the next one. Bye-bye.